Hello, welcome. This is Blockchain Bloom, the blockchain educator. I'm Matt Lipping, and in today's video, I'm going to talk about that OpenSea turns into a ghost town after the daily volume goes down 99% from its peak. Then the second thing I would like to mention is that JPMorgan advises investors to sell crypto and buy value stocks. And the third is all about that the new free-to-own GameFi model is a high risk, according to CZ. So guys, all this in today's video. And if you would like to keep yourself up to date, simply subscribe to this YouTube channel, Blockchain Bloom, because every single weekday I bring you the freshest cryptocurrency and blockchain news. Hit the like button if you like this kind of content, and check out the links under this video because there are many useful ones. Okay, let's have a look at the market, where we can see that the Bitcoin is at $20,284 about 1% down in the last 24 hours. Ethereum pretty much the same, which makes it 1,581. When we're looking at the last 24 hours and the winners, then Nexo is leading with 6.6% up, Lido Dow 6.5 and 4.1 goes to Leo. When we're looking at the losers in the top 100, 7% down Helium at the place number 1. Then we have Synthetics about 7% and eCash going down 6.6. When we have a quick look at the candlestick chart, here you can see Bitcoin present price. We have this here. This was the point, the support point about this 19,500, 600. We all went down, and now I drew real quick here this yellow trend line. Let's see how that plays out. And of course, we can pull here another one, and then it could be a bullish pattern as well. However, the situation, well, how it looks like, so we'll see. Now, it's really difficult to forecast anything because the mood on the market is just not the greatest. And when we have little, rallies, yes, they can happen, no question. So somebody who doing this kind of day trade, can make money with it. But me, who is rather here as a hodler and for long term, I rather use this time to do DCA. It's not financial wise, and preparing myself for the next bull market. Okay, and now let's move on to the first topic. And the first topic is all about that OpenSea turns into NFT ghost town after actually the daily volume goes down 99% compare its peak. Well, we had great times in NFTs, huge daily volume, but this is the past because right now we're facing a totally different situation. OpenSea turns into an NFT ghost town, as you can see this headline, after the daily volume goes down 99% from its peak. An ongoing, debt crisis at the lending platform BandDAO is also increasing the risk the NFT bubble will burst. So NFTs are not in the good shape right now. OpenSea, the world's largest non-fungible token marketplace, had witnessed a substantial drop in daily volumes as fear about the potential market bubble grow. Notably, the marketplace processes about $5 million worth of NFT transactions on August 28th, so a couple of days ago, which is approximately 99% lower than its record high, which was on the 1st of May, and it was, daily $405 million US dollar. You can see here at Daprator how it shows how it went down. And meanwhile, on the monthly time frame, so we're looking at a bigger time frame, OpenSea volume has dropped 90% from January 2022 this year, when it was at its peak. For instance, the floor price for Bored Ape Yacht Club, probably the #1 NFT project out there, dropped by 53%. Now the floor price is at 72 ETH versus its height when it was in May, so when it was the highest. The floor price was 153 Ethereum. crazy. I mean, still the 72 Ethereum, guys. It's a lot of money. But also Ethereum went down from 4,800 all the way down to 1,500-ish right now. So even the value of Ethereum. So the question is that what about here? This NFT bubble is all about to burst because we're seeing this statistics. And, I just mentioned BandDAO. And BandDAO, last week, which is a decentralized autonomous organization that enables NFT owners to collateralize their digital collectibles to take loans in ETH worth 30 or 40% of the NFT's floor price, voted to change its protocol code to make NFT collateral more liquid. Because the problem there was that now, they put down their Bored Ape Yacht Clubs and they get, so that's the collateral what they use, the NFT, and they get in return, compared to the NFT's floor price, ETH. But right now the floor price is dropping significantly, and this puts the collateral in danger. And this is another danger on the NFT market, what can happen. So interesting things. We had a really good times in NFTs, but we do know that this is something which is very, very new. It's in its infant age. And in a couple of years' time, we will see in which way NFTs develop. But now it was just a crazy FOMO all around it. And of course, sooner or later, 90% of these projects will just simply disappear. They will not survive. You have to handle really NFTs, in my opinion, just like little, very dangerous altcoins. Put it this way. Not dangerous, it's not a good word for it, but like, high risk altcoins. This is somehow I handle NFTs. And you can be lucky. You might choose the next Bored Ape Yacht Club, but you might win the lottery as well. Okay, if you play it. Right, so the next topic is all about that JPMorgan advises investors to sell crypto and buy value stocks. So now JPMorgan is saying that, well, crypto, it's not the place where we should be. It's saying now to sell your crypto and buy value stocks. Says that the Fed overestimates the strength of the US economy. So they don't think it's too strong as the Fed believes. So the chief global strategist of JPMorgan Asset Management has advised investors to focus on valuations, invest in value stock, sell crypto, and steer clear of Bitcoin. Well, now you always start to think about, if JP Morgan's saying this, shall I do the opposite? Well, if you're confused, I'm not surprised. Because these guys back in 2017 said that, Bitcoin is a fraud and all these kind of things. Then you see that they going into crypto and try to support crypto. Now they say stay away from it. So is it now the time when they're collecting because you sell and they buy on lower prices? Question mark. So what they're saying that the economy has got on one foot into a recession and the other on the banana peel now. So very, very big uncertainty what's going to happen right now. And we will see, of course, in the future how this economic recovery will play out, because sooner or later it will. But can we face a very difficult autumn, winter time? Not just because crypto winter is here. Yes, we can, because the Fed is so far fighting against inflation. This is definitely not good for stock, for crypto in short term. But yes, on the other hand, you get now low prices. If there is something you would like to invest in, not financial advice, you decide, but you know what I'm saying. But I always scratch my head when JP Morgan is saying something that, what's the message behind it? Anyway, okay, let's move to the next one. And the next one is all about this new model, free to own GameFi model. And CZ is saying that there's a high risk in this. So now we have this new free-to-own GameFi model, GameFi, and this is high risk according to CZ. He's saying that if everything will be free in the world, why do we have to work so hard? People working for money. You work for something, you work for money, you then get paid so you can afford other things. And this keeps the economy working. If more and more people will push free stuff, then there is, a totally new model going to start. But how are you going to pay for your food in the supermarket if you have to give everything free? Do they give it for free? So this is a kind of a dangerous thing. So there's this gaming startup, Limit Break. The project gained popularity with the launch of a free mint NFT collection called Digi Daigaku, maybe. So at inception, the community is able to begin free, possessing ownership of NFT that in turn acts as factories that generate new NFTs for the gameplay and cosmetics. The ideal is that since the NFTs are given for free, players aren't, pressured to recoup the cost of their investment as quick as possible and can therefore stay and play the game for a long time. So the pressure is not on that you have to make money out of it. And we have here recent months, the blockchain games have faced severe criticism for gaming industry veterans from their focus on making money instead of enjoyment, because that was the origins of games. For example, we have here one, Mojang Studios, creator of Minecraft, said that it would ban NFT integrations, citing the speculative pricing and investment mentality that takes away the game experience. And so now again, first the idea was play to earn. How awesome! You can make money with playing. Then that's a great idea. Now, well, it puts too much pressure on you and takes the gaming experience away. So let's make it free. And the future will tell what will work. Anyway, to giving things for free, it's also dangerous. From some limit, I think it's totally okay, but it's important that the focus is not shifting in this direction, because otherwise it doesn't make sense for them to build it. Okay, guys, that's it for today. Don't forget, every single weekday I bring you the freshest cryptocurrency and blockchain news. Therefore, if you subscribe, you will get them. Hit the like button if you like this kind of content, and I'm back tomorrow with the freshest. Have a good one. Bye-bye.